It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And this is episode 208. Hello there, we are back together again. It's Tyrone Jackson, the wealthy investor, still the wealthy investor, always the wealthy investor, and definitely the wealthy investor, and welcome to my show. Hey, listen, we thought we'd do something new. We talk about trading stocks in this market. At the time of this recording, it is March 2023, and Wall Street is fearing a banking collapse. Da-na-na-na. Is your money safe? Now, be sure to listen to this episode all the way through the end, because in the second half, I'm going to cover up what's going on in banking stocks, and you don't want to miss it. So here's what's happening in this world right now. The market is stopping and starting and stopping and starting and stopping and starting. That means that Monday, Tuesday, the market is up. Wednesday, the market is down. Thursday, the market is deep down. Friday, stocks go up. This is a very volatile market that we're in right now. And how do you make money as a stock market trader? Well, of course, covered calls, because all of this volatility, stocks going up and down and up and down, up and down, cause call option premiums to rise. But not just any call option premium, the 30-day call option premium out of the money is larger than usual. What does that mean if you're a covered call writer like me? It means on every trade, we have a saying in the Wealthy Investor Program, when in doubt, split it out. So if I want to enter a trade with 1,000 shares, I'll sell a 2-week call out of the money. Let's say, for example, $2 per contract. $2 per share or $200 per contract. And since that out-of-the-money call premium is larger than usual, then that means what? The 30-day call could be $5.50. So I might as well split out my shares, 500 on a 2-week call and 500 on a 4-week call. Now, people go, why do you go out and sell that 30-day call? Well, see, I have a plan for the money that's actually coming in. So let's just do a quick review. Covered calls, best strategy ever for the retail investor like you and I, because it allows us to make money that is guaranteed whether the stock goes up, goes down, or stays the same. If I sell a 30-day call that's above $5 on 1,000 shares, that's $5,000. But with all this volatility, I want a shorter day trade, maybe 2 weeks out, because perhaps I'll be called out of those shares because of the volatility within 2 weeks, and I'll sit on the other half of my shares for the full month. Now, if you really, really, really love trading, you know part of this exercise is to not only get the call option premium, the cap gain for being called out of the stock, but also the dividend. So if I'm using this long-short combination, as I like to call it, and trading style, I want to make sure I know when the ex-dividend date is on that stock. Now, why is the ex-dividend date supremely important? Because that's the date in which I must own the shares to qualify for the dividend. So a lot of people say, well, I like this dividend capturing thing, and I want to make sure that I'm always getting as much dividends as possible. Right, but if you don't know what the X date is, it's possible you can own the shares the day before the dividend is distributed, but you didn't own the shares on the date that you qualified for the dividend. So I always say 3 days plus X, right? You want to own the stock 3 days before the ex-dividend date, because when you buy or sell a stock, the transaction doesn't clear for 3 days. Get it? All right. One other thing on this note, a lot of people say, hey, I've been called out early before my strike date, and I didn't get the dividend. Right. That's because some institution needed 2.5 million shares, so they exercise the shares out of your account so they can swipe the dividend from you. Now, that's not bad, because that means that you get the call premium plus the cap gains on the shares, right? Not bad. So don't worry so much. A lot of this stuff is kind of like automatic wealth building, automatic trades that you can have in place. But if as long as I own that stock 3 days before X, I'm great. That's why I like the 30-day cover call, right? The other party wants to call me out of my shares and pay me the cap gains sooner during a dividend paying period. I am happy with that. It's more money sooner, faster than I anticipated. Some of you like trading stocks that are under $100 a share that do not pay a dividend. Therefore, your money isn't working quite as hard because you're trading a cheaper stock and that company hasn't matured to the point where they can pay a dividend. But when your account gets bigger and bigger and bigger, you must become dividend conscious. Now, let me also say this. A lot of people think trading in the stock market is guesswork, right? It's gambling. Oh, no, it's not. It is a calculated way of getting a guaranteed return on your investment on a consistent and regular basis. Now, let me go back to how you were programmed first. So when I use this kind of shorthand language and I'm explaining to you how to trade in this market, or at least how I like to trade in this market, if you don't have the right financial education, you're losing thousands of dollars per week or per month, guaranteed, because you put your money in a mutual fund. Why would you do that? Because that's all you knew to do. But the wealthiest among us actually have a financial education and they know how to move their money around in the stock market so their profits are maximized. Let me give you something to think about. When you're trading a stock that's in the Dow Jones Industrial Average or the S&P 500, right, most of those companies have matured to the point where they can issue a dividend. Maybe that dividend is 10 cents a share. We know on Home Depot it's $2 per share per quarter. So I've been really teaching this idea of understanding your dividends at a higher level in this market. And here's something I want you to think about. Do you think the world's wealthiest people who send their kids to schools like Princeton, Harvard, and Yale are paying for that college tuition out of their own pocket? Some are and some aren't. Some are just letting their dividends, which come in every 13 weeks, pay for college. See, wealth is nothing more than a series of positive habits. And if you're not in the habit of doing good things with your money, guess what? You'll always be trading time for dollars. Right now in this market, you really should be focusing on dividend-paying stocks because you're getting the covered call premium as well as the dividend every 13 weeks. Like clockwork, that money is guaranteed. So here's what's happening in this market right now. And this is why I like the when in doubt, split it out trade. Is because we're in the middle of the Federal Reserve still raising interest rates to do what? Bring down inflation. Here's a quick recap. When the U.S. economy went on shutdown because of COVID, there was little to no consumer spending. Why? The U.S. economy is 2/3 consumer-based. What does that mean? Well, we don't make a lot of our money as a country off of natural resources. It's mostly human beings like you and I buying things, DVDs, televisions, cars, right? We consume things in this country and we don't save and invest enough, but that's just the truth of it. So because we're a consumer-based economy, COVID hit, guess what? Spending slowed down. And in order to keep the economy from just out and out collapsing, the Federal Reserve, which has the authority to pump up the economy, started sending out billions and billions of dollars in the form of things like PPP loans and other subsidies to businesses to keep consumer spending consistent. That pumping in of money, which you could refer to as liquidity, saved the U.S. economy during the COVID lockdown. Okay? But COVID also forced supply chain issues, right? Like it was hard to get toilet paper and napkins and aluminum foil, right? So the cost of goods and services started to rise. And when the cost of goods and services are increasing, we refer to that as inflation. When the cost of goods and services are declining, that obviously is deflation, and then there's something that economists call stagflation, which is a deviation and a mixture of both of those patterns. So what's really interesting is that if you're an educated stock market trader and investor, you sometimes find yourself having to dance with economic theory. So sometimes when I'm teaching live, people go, wow, how did you learn all that? Well, I'm supposed to know, as an educated trader, the external forces that are impacting the stock market, not just my favorite company I like to trade for fast money. So the longer you trade, the more broader education you get about things like the economy. So that's why right now, March of 2023, we're seeing wild swings on a daily basis in the stock market because the market is driven right now by something called sentiment. And sentiment just means the feeling of Wall Street as a whole. Now, who's really running Wall Street? Traders like you and I? No. Traders who are buying $2, $3, $4 million worth of shares every single day. It is really their feelings, their trades that drive the indexes. And when I say the indexes, what causes the Dow to rise like it did today? Well, all that buying in the stock market. What causes the Dow Jones Industrial Average to decline tomorrow? All of that selling in the stock market. And it's this constant buying and selling that causes volatility. Now, what I like about what I'm seeing right now is this volatility is great for fast money traders. I buy 1,000 shares of Apple today, right before the close, and I tell the software when the stock goes up $1.50, sell me out. When am I going to get out of those shares? High likelihood it'll be tomorrow morning. Why? Patterns tend to carry over every single day in the stock market. And if I can get out of my 1,000 shares at $1.50 per share profit first thing in the morning, that's a pretty good way to start your day. Now, when I teach volatility trading, and many of you noticed by now, it's not me sitting at a computer. I use programmable trades. So imagine if the market shoots up tomorrow, I get an email, all my shares are sold. I am out at a Pilates class, literally making money. Okay? So that's why the Wealthy Investor Program is all about wealth and residual income, not you sitting at a computer all day trying to day trade your way to millions. You might as well use good till cancel orders. And that way, software is actually trading your stocks out at a profit. So what's going on in this market right now? We have algorithms that buy and sell stocks for larger institutions, banks, insurance companies, college endowments, right? Gone are the days where human beings are just sitting there, buy, sell, sell. That still happens, but these days they say on Wall Street it's about 70 to 80% automation. That's another reason why we have all of these swings, because I may be placing a buy order and an institution may be placing a sell order, and we're duking it out every second of every day. There's an awful lot of money being made right now off of volatility and covered call writing as part of a trade combo. So if you don't have a trading account, what are you waiting for? You're listening to the show. You're not in on all this price action? If you do have a trading account, what are your 3 favorite trades in this market, and what are your 3 favorite stocks? Because, see, I can buy and sell the same stock over and over and over again all in 1 week, and for a profit, and collect the dividends. Do you get it? I don't need to be trading 7, 8, 9, 10 different stocks. That's a lot of busy work. Now, when you come from a working class family, there's a tendency to associate busy with more income, right? Because busy means more overtime. Someone's going to pay you more for your physical efforts. In the stock market and in the world of wealth, it doesn't require that you physically be busy all the time to make a lot of money. That's one of the things I really love about stock market trading. Okay? So right now, just to recap, we've got this rise of interest rates from the Federal Reserve to try to slow down inflation. It isn't working because inflation is still high. And the Fed wants inflation to go from 6% to 2%. So what are they doing? They're raising rates, the cost of money, to slow down the U.S. economy. Now, initially, this might not seem like a big deal to you, but this moves the world. So if you have a job, you don't understand often what is moving the entire economy, because every time the Federal Reserve raises or lowers interest rates, Wall Street is stimulated. And all that trading activity causes a lot of wealth. Do you get it? All right. So also, when the Federal Reserve raises interest rates, covered call premiums go higher. So the trades that we favor in the Wealthy Investor Program produce even more and more income in a high interest rate environment. That's why you listen to the show. That's why you follow my trades. That's why you want to get in on this game, because it is yours. And the residual income that can be generated is yours for the rest of your life. Pretty exciting, huh? Yes. Now, if you are following the Wealthy Investor Program, as many of you are around the world, I want to remind you that in July, you can come to Maui and spend 3 or 4 days with me so that I can give you high-octane trades, fast trades, trades that are leverage-oriented, and trades that make a lot of money when stocks drop. Some of these trades I only teach once a year live. Where? At the Grand Wailea in Maui, 5-star hotel. Be there July 26th. Go to the Wealthy Investor right now. Get on our email list. And when the discounts come out for you to come and sign up for the seminar, you can take advantage of them. But I want to see you this year in Maui, Hawaii, learning and mastering these fast money trades. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the Wealthy Investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey, it's Tyrone Jackson, Wealthy Investor again, and I just wanted to remind you that if you enjoy listening to the Trading Stocks Made Easy podcast, be sure to share it with your friends all across social media, including Facebook, Instagram, and Twitter. If you enjoy hearing about success principles that inspire you, as well as interviews with some of my most successful students, I want to remind you it's right here at the Trading Stocks Made Easy podcast, wherever you get your podcast. And make sure you download as much free material as you want at thewealthyinvestor.net. I'll see you there. And welcome back. Okay, I guess you've decided during the commercial break to join me in Maui on July 26th, right? Right. And bring your whole family, why don't you? All right, we always have a great time there, and it's such a superb resort, and I love the Grand Wailea. The food is terrific, and treat yourself. For those of you who have a trading account, take your dividends to pay for your flight and use your covered call premiums to pay for your hotel. That way, the stock market is actually giving you the money to show up there. So I hope to see you there. All right, let's get back to what's going on right now in this market, because over the last 2 weeks, there's been a lot of fear around bank failures. So remember early in the episode when I was talking about the Federal Reserve raising interest rates? Okay, when they raise interest rates in order to slow down inflation, one of the things that's required for inflation to slow down is that people lose their jobs. Unemployment goes higher. Remember I told you we're in an economy that was 2/3 consumer-based? Well, if people don't have jobs, they don't spend as much. You have a slowing economy. Right? Okay. The problem is with a slowing economy, that means that some consumers aren't going to be able to pay their car loans, their credit cards, or their mortgages. So see, this is what nobody talks about in the financial world because they don't want to scare people. But in order to slow down inflation, unemployment has to go higher. Well, if you borrowed money from a bank to finance a car, if you borrowed money from a bank to purchase your home and you can't make the payments on time defaults are going to go higher. Now, essentially, there are three different types of banks in the U.S. banking system. There's your local bank that services your community. There's your regional bank that maybe services your state. And then there are national banks. So national banks like J.P. Morgan Chase, Bank of America, Wells Fargo, they service the entire nation. Got it? Okay. Congress sets forth certain laws that says, hey, national, regional, and local banks, you must have a certain amount of cash requirements on the side at all times. And if you can't, your bank will be considered in default. This is called regulation. So any of you know anything about Dodd-Frank, you know that regulation exists to stabilize the banking system so banks don't get greedy with how much they loan out and how much they have in liquidity, capital reserves, assets on the side, et cetera, et cetera. If a local community feels that their local bank could go belly up, there will be what we call a run on the banks where people say, you know what, that bank might close. Let me go get my money out of that bank right now. And guess what? That prevents your local bank from meeting capital requirements if everybody rushes in to take their money out. Now, you may have heard on some of these commercials, member FDIC. My old voiceover days there for a second. Okay, the FDIC is federal insurance on your deposit. So you are insured right now, if your money's in the bank, up to $250,000. If the bank goes belly up and you have less than $250,000, the federal government has you covered. But if you have more than $250,000 in the banking system, the bank goes under, and you have, let's say, $750,000, guess what? You're going to lose that money less $250,000. So imagine if you're a small business and you have $750,000 in a banking account and you're only insured up to $250,000, you may run out of that bank and move your cash to a national bank. Now, what's going on right now is there are defaults on regional and some local banks because they can't meet these capital requirements. So you see in certain places people taking their money out of the bank and putting it in a national bank. But if the Fed keeps raising interest rates, the banking system as a whole, local, regional, and national, could be facing what we call systemic risk. Interest rates are rising, all of the banks are at risk. And that's why banking stocks are dropping right now. Now, most people think of the stock market as making money when stocks rise. The market is bullish, right? But did you know there are a lot of ways to make money when stocks decline? Yes. Most educated traders know how to do this. So right now, even though there's all this volatility in the market, there are people who are becoming millionaires and multimillionaires because of the negative sentiment around banking stocks. In other words, there's a small group of people making a fortune off of the potential of banks declining. Now, you don't hear this on the news because it's not a very popular thing to say. You do hear it when traders are called before Congress. And you made money off that stock falling? Yes. Well, I see here in this report you made $30 million off the stock falling. Yes. And then the congressperson goes, that is outrageous. Hey, congressperson, guess what? Anyone can do it. Anyone can go out and buy puts and set up spreads that are expiring as stocks are falling. It's nothing new. But Mr. and Mrs. Congressman, you don't have a financial education, so you don't know how much money is actually being made when banking stocks decline. Now, I'm not suggesting that you and I profit off of bad news, but there are traders who are good at finding bad news and making millions of dollars off that stock declining or even going to zero. How about that? See, this is why I always say the stock market is one game and 100 ways to play it. In my approach to the stock market, we're always looking for good news, and we're playing the stocks for its bullish nature. Why? Do you know how negative you have to be to wake up every single day and look for bad news in the stock market and bet that a stock just goes to zero? That's a very negative way to live your life, although people become millionaires and multimillionaires. Why? Because when stocks are dropping, they drop much faster than when they rise. I don't really like that strategy. I like playing the upside because it's much more of a positive orientation. So that's what's going on in the banking sector. We'll see if I'm right, which is why I'm telling you I'm recording the show March 2023. I think the systemic risk in the banking sector as a whole is low, especially when it comes to national banks. I think this is something that'll go on, the fear of regional bank defaults, I think maybe for another 8 to 10 weeks, and then it'll get lost in the sauce. The market will start to retrace, but I do think the Federal Reserve is going to pause interest rates. This is a big risk for me because all you have to do is listen back to the show and see if I'm right. And I think that pause will come before July of 2023. Am I going to be right? We'll see. Whether stocks go up, go down, or stay the same, you and I can still be earning thousands of dollars a month as covered call writers and collecting dividends. That's exciting. That's exciting. That's exciting. It's all about getting that financial education. Thanks for listening to the show about what is going on right now, March 2023, in the market, and I hope that you are profiting from it. Tyrone Jackson, Wealthy Investor. I'll see you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.